Start off, word of the day. What are you
Yes.
thinking?
Perspective.
Right.
And I know it's hard for investors to keep their perspective during these periods of heightened volatility and all the uncertainty that continues to percolate in the markets. But investors should try and avoid the temptation to try and time the market and make a short-term investment decision that has long-term investment consequences. And here's a dose of that perspective. Over the last 20 years, had investors just missed out on the 7 of the 10 best days in the market, they generally occur within 2 weeks of the 10 worst days. Interesting, right?
Yeah.
So if you try and time the market and sit on the sidelines, you're likely to miss out on the most significant returns that the stock market has to offer. So keep these periods of volatility in perspective, but also look to some of those underlying themes that were taking place and building momentum before the tariffs were announced, and I believe will continue to provide growth opportunities for years to come.
I got to be honest, Kevin, it's hard to think of anything before the tariffs were announced. We've seen a lot of volatility
Seems like
since
years
then.
ago.
It seems more like we're looking forward right
Yes.
now. So two big things coming up tomorrow. We get the GDP and we also get PCE.
Yes.
I'm looking at the numbers. GDP is expected to fall off a cliff.
Yep.
2.4 in Q4, down to 0.4 for Q1, and then also PCE. Also expected to decline, but not off a cliff. I think a lot of people would like it to fall off a cliff.
Yes.
This is headline right here, 2.5 down to 2.2. What does this all mean?
I think it just reiterates that the Fed is more concerned with a slowing economy than they are with an inflation scare posed by these tariffs. If you look at their own forecast for GDP growth this year, they lowered them to 1.7%. They believe it's going to stay below 2% even next year. However, when they raised their forecast for inflation to 2.8%, they believe that's going to come back to 2.2% next year. That's because higher prices force the consumer to spend less. If the consumer spends less, given that the consumer spending accounts for 70% economic growth, the economy can only slow further. That's why, Frank, I believe, and I'll say it here on the show, a potential first rate cut at 25 basis points may take place later this quarter after their June meeting.
All right, Kevin, we're running out of time a bit. I want to get to your pick. It's RTX,
That's
defense name. I do want to ask you, why buy this now? It's actually down since earnings. What's giving you the confidence to buy it now if they're having their own questions about tariffs, supply chain, and everything else?
Yeah, President Trump announced they're going to increase military spending to $1 trillion next year, a 12% increase over last year. He keeps speaking about building an Iron Dome. Well, guess what? Raytheon, or now RTX Corporation, is involved in missiles and missile defense systems. They could be a likely benefactor of all that increased defense spending.
But what about the tariff impact that they're citing? I know also in Europe they're increasing the defense spending as well. I would imagine RTX would be a beneficiary of that. But the fact that they're concerned about tariffs, why? I mean, aren't you concerned if they're concerned?
I think the tariffs aren't going to have as large of an impact on these defense contractors because everyone is increasing their levels of defense spending. Who's likely to benefit? The largest companies that can withstand the impact of those tariffs.